On today's show, 3 questions. Number 1, is the market giving us mixed signals? Number 2, is Santa Claus coming to Wall Street? And number 3, did the dental predictions come true?
Consult an advisor or conduct your own due diligence when making financial decisions. General principles discussed during this program do not constitute personal advice. This program is furnished by Dentist Advisors, a registered investment advisor.
Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
I'm Will.
And I'm Rabih.
Yeah, you are, Rabih. Did you get your water filled up? Get your mug filled?
Look at this.
You can just skip back like 15 or 30 seconds and you'll hear Rabih's water pouring in his mad intro.
As I'm doing the first question, you just hear the pouring of water. Right as I was starting, he's like, oh, wait, I got to fill up my water. That's pretty funny during the 5-second count. Couple of things I want to hit first. Number 1, we've already pump faked everyone, but guys, I promise you this is our actual last 2 cents of 2025. This is the final show of the year. We're going to give Michelle, it is, yes, we're going to give Michelle and the team a break for the holidays. I don't care how many people reached out and tell us, we had an outcry as we talked about last time, where I literally had to push my surgery because so many people were asking for us to keep it going. As we know,
there were demonstrations on the streets.
There were demonstrations. No, this is actually the last show of the year. That's number 1. Couple of things we wanted to hit. If you missed it, we've talked about this before, but Launchpad is officially here. Registration is open. We had built a pretty lengthy wait list leading up to it, and when we just opened up the registration of this past week, it is available. So get in there, save your spot, dentistmoney.com/launchpad. The first course will be February 6th. We're going to do weekly courses. By the way, they're all on demand. So even if you're sitting there being like, oh, I can't make it to these Friday classes, you will have access to every single course on demand. You'll get access to also office hours the following week with one of our advisor team every single week to be able to ask questions for your specific situation. And then at the end of it all, you're also going to have the ability to have a one-on-one meeting with one of our advisors to put together your own personal plan. So it's going to be, I think, packed with value for you. If you are a dental student or a new grad looking to establish just like your base financial education, I think it's going to be a huge win for you in 2026, that is. And then the next one, if you missed it, we hit 10 years on the Dentist Money Show. We're super excited about it. This is what Rabih was filling up as we were starting the intro. Rabih, show the good people, showing the mug, the Dentist Money Show mug. If you want more information or you want to get a mug, go to dentistadvisors.com/10 years. You can check out the episode there and also get a mug. We'd love to send one out to you. So with that said, let's jump in, guys. Final show of the year. Let's go to Rabih. Is the market giving us mixed signals?
It might, because
maybe
it might, because we finally caught up on economic data. You guys are aware of the whole, pause in the data. Some reports are going to be released late. Some reports won't even be released. And finally, this week, we got both unemployment data and we got inflation data. And we saw how the market reacted to them. And there seems to be a split narrative. So let me tell you what we got and how the market is reacting. Okay. The first thing that we got was the unemployment numbers. And we got the non-farm payrolls for both October and November. In October, we lost 105,000 jobs from the economy. And then in November, we added only 64,000 jobs to the economy. In reference, back early in the year when we're talking like January, February, March, April, before it went down to 0, we were adding to the economy around 100,000 jobs a month. So now we lost 100,000 and there's this month where we did 60. But if you guys watched 2 cents last week, you guys remember that the Federal Reserve says, I don't trust this data. Our estimate is that it's 60K less every single month. So what this is saying is that in October, with this Fed adjustment, we lost 160,000 jobs. And now in November, we did not create any jobs, right? So this tells you a lot about the employment situation in the US. Yep. And the unemployment rate has ticked up to 4.6%, first time in a very, very long time. We were at 4.5. This was the unemployment data. Then came and that was on Tuesday. On Thursday, yesterday, we got the inflation data, the CPI. For the CPI, we only got the November data. The Bureau of Labor Statistics was like, we're not going to publish the October one. So we only have September and then November. There's a gap in the data. For November, the inflation rate, the CPI, this is the same one that went to like 9.1 a couple years ago. Just to give you some trend, we were at 2.7% annualized in June, stayed at 2.7 in July, went up to 2.9 in August, went up to 3% in September. So there was an upward trend in inflation. And then October is a missing month. And then November is a print of 2.7, all the way down, coming back to where we were in July. So what the data is telling us is that we're going to have more unemployed people or a higher unemployment rate and lower inflation based on this one reading of November, which is a slowing economy. What do you expect the market to react? How do you think we should approach monetary policy right here? It's usually, this is more favorable to cutting interest rates. The economy is weakening. If we cut interest rates, thankfully, inflation is also weakening, so that won't spur it out of control. It's not like both went up or both went down. No, actually, one went up and one, they moved in the same direction. So you would expect that the Fed funds rate future, which is the expectations for interest rates, you'd expect to look at the 10-year treasury to move, to indicate that they expect a regime where interest rates are lower. Well, the 10-year treasury didn't really move. We're fluctuating between the 4.12, 4.17. This is the interest rate that affects our mortgages and our, most of our lending. So that stayed put. The market didn't make any reaction to this data. And then if you look at the Fed funds rate, the market is now pricing a 75% chance of no cut in January. So they don't think we're going to be cutting next year. We're here. Maybe one cut by February, that's about it. So if you look at the data, we got by the end of 2026, the market right now, based on the current prices, current probabilities, is only expecting one cut for 2026. And then for the end of 2027, we're expecting another cut. So 2 cuts between now and 2027. This is what the market is pricing in, but the data is different.
Yeah, that doesn't make sense. That is confusing.
And then there's an overlooming, thing that's happening is that we're going to have a new Federal Reserve chair next year. And we're going to have at least 6 meetings without the current open market committee, which will vote differently.
And that chair will be appointed by Trump, who
100%.
we all know is openly wanting to aggressively cut rates.
Yes. So
make it make sense, Rabih.
It's a dilemma. So either side has to be correct, right? It could be that those numbers aren't true. Like they are not trusting the data that the administration is publishing. The market is doing its own calculations. Every large bank have big teams of researchers sitting there crunching numbers, replicating these indicators, and they say our indicators are different than the data the government is sending out. Which is, problematic because we've built this economy on transparency. So if that's the case, then maybe these numbers are not a signal but a noise, and the market knows best. And they think that we're in a position where we shouldn't cut interest rates. Or the other side of the equation, this is how I'm trying to rationalize it. The market thinks that none of this matters until we get the new Fed in place. So they're staying put until that changes. The announcement for the Federal Reserve is going to happen early January, according to betting markets and according to what the president has said. So maybe the markets won't reflect a slowing economy until then. But what does this say to an equity investor, for example? Like if we're heading in a direction with lower interest rates and the market hasn't priced them in yet, then stocks on a relative basis are undervalued for this month, right? Like we're going to head to a lower interest rate regime, whether the data is correct or whether the president appoints, the person that he wants. Both situations are lower interest rates. Lower interest rates usually favor financial assets. I'm not just talking stocks. I'm talking bonds. I'm talking gold, etc. They're not being priced in the equity market right now. If you look at the futures, what does this tell us? So,
so you're making a prediction.
This is the show for predictions. We're going to get to it at the end here. I'm asking for some predictions at the end here.
I wouldn't say it's a prediction, but I'm trying to analyze the information. I'm trying to analyze the information, and it seems that whether you look at it from this side or that side, they funnel to the same economic outcome, which is lower interest rates. Does this mean that the market will go up when they announce lower interest rates? We do not know. This is the variable input. You can know exactly what's going to happen economically, but you will not know how the market reacts to that economic news. If I was the market, my reaction is that I would want the stocks to go up because that makes sense according to how I'm analyzing it. But yeah, I wish we knew, Will. I wish we knew.
It would be nice.
Is there something here, Rabih, and maybe I'm completely overthinking this, or underthinking this. I don't know. You take your pick. But is there something here too? Maybe there's some aspect of like inflation still looming out there and being just kind of like, even if it's just like kind of this PTSD of inflation where the market still generally believes that inflation's not gone and we can't be aggressively cutting rates because of that. And the other aspect of this that I'm thinking about is, again, this could be the ultimate overthink, is that there's some aspect of like Trump is just, we all like him or not, this is not a political statement, like him or not, I think we can all agree like Trump says a lot of stuff, right? All the time. Like he's always saying stuff. And I wonder if there's some aspect of like people just not really believing his talk when he's not in control of the Fed right now, obviously, meaning the appointee. He says a lot of stuff because there's nothing he can like really that he can actually execute on. But when it actually becomes his appointee, I wonder if there's some aspect of like, okay, now it's going to like all kind of even out and it's only going to be a couple of cuts. A lot of it was hyperbole by Trump. Because again, like him or not, we all can agree he engages in hyperbole. I wonder if there's some aspect there, or is that just complete overthinking when it comes to this data?
It could be. So the first part of your question is like, is the inflation, we think inflation is there, like this 2.7 number, we can't really trust it. Well, it could be. Federal Reserve in their meeting last week, when they justified the cut, they said if you isolate tariff impact from overall trend, the overall trend has went back very close to the 2% target. And what remains is the impact that the tariff has. And they think that this impact is a one-time thing because you're not adding tariffs it's just a one-time price
one
level
hit
move,
and then
one move. And it's going to take a while until it dissipates through the economy. But right now, you're seeing it. So that is what the Fed is saying, but the Fed could also not be correct. And businesses and large investors in the stock market might say, well, this might not be a one-time thing. Like there is a risk that a tariff could create an inflationary spiral and not a one-time thing, given how hard it is to reestablish new supply chains, right, for these tariffs. So this is the beauty of the market. The beauty of the market is that everyone with an opinion can participate and weigh in their opinion. And the aggregate at the end tells us who is right. But the aggregate right now is staying constant. So it's a stalemate of opinions, I would say, based on current prices. And we do not know, but every single day we get new information and that changes our mind. But to the second point about the president, providing too much information that people get lost. Actually, this happened with the Fed pick. We made the whole episode last week about how Hassett is going to be the Fed chair, according to betting markets. And then he had another interview with another Kevin Warsh, who is on the Fed. And the probabilities have shifted and they got close to a 50% point. Now it's back in favor of Hassett.
So it's 100% chance it's going to be a Kevin.
He said it's going to be between a Kevin and a Kevin.
Okay.
So yes,
I've always wanted a dog named Kevin.
It was interesting politically, like the Desperate Housewives of the Fed, because when that guy decided to interview the other Kevin, the older Kevin went on to like Wall Street Journal or New York Times and said, "Oh, Fed independence is so important to win the importance of the trust of the market participants." So there's a lot of politics happening, and until that's settled out, we will not know who the Federal chair is, but it might still be Hassett.
That should have been our question: is which Kevin will win?
Yeah, that's a good one. Is it Kevin or Kevin?
Is it Kevin or Kevin? And we could have looped in a Kevin McAllister, Home Alone type. What are we doing here, guys? Yeah. What are we doing? Will, any thoughts on this before we move to the next?
No, I mean, it's going to be interesting to see how it plays out in 26. I think it will, again, all of this is short-term market movement stuff, but I mean, selfishly for my refinance of my house, I hope interest rates go down a little bit more, and we'll see what happens. If that means the market goes up also, then win-win for me. But we'll see.
Yeah, it is. It'll be interesting. We talked about this yesterday in our meetings around just like houses and mortgages, and it'll be interesting to see what happened. We talked about this, I think, on the last episode or maybe 2 ago. I don't remember. I lose track of all these, but just around kind of the mixed signals. Speaking of, Rabih, of like housing,
right?
We talked about the buyers versus sellers, and you brought up a great point, Rabih, around how do you actually gather data of buyers. Anyway, so that's going to be another interesting kind of like personal finance that affects everyone's situation, is just what housing does in 2026.
Right, because they for mortgage broker interest rates on mortgages are already priced into what they think the Fed is going to do, right? Like I think they front run that a little bit as well. But if there is some unexpected drops in the future, then I think it could mean big things for the housing market, honestly, too.
Yeah.
Like Rabih said, it would affect across all assets, not just stocks.
Yep. Yeah. It'll be interesting to see. Okay, moving on. Speaking of Christmas, which that was a horrible transition. Speaking of Home Alone, Will, is Santa Claus coming to Wall Street? And are you going to sing us a song to
I should. Yeah. That's on like the premium. We got to put that behind a paywall or something.
Yeah, we do. Can I share one thing really quick? Speaking of songs, Will, you'll appreciate this. My kids have started singing this year. This is the first year they've started singing the Jingle Bells Batman Smells version.
Okay.
And it's so amazing to me. Rabih, I'll sing it to you later.
Okay.
I just love it because it's like my childhood. We all the kids,
so good.
If at least from my generation, Rabih used to sing the Jingle Bells Batman Smells, Robin laid an egg one, and my kids sing it just constantly.
It's nice to see the tradition get carried on.
It is nice when traditions like that, the fundamental foundational traditions of America, get passed on to the younger generations.
Yeah,
exactly. Go ahead. Is Santa Claus coming to town or
We'll
Wall
see.
Street?
I mean, if you're a betting man, then you'd say that he is, because we're going to talk a little bit about the Santa Claus rally, which is the last 5 days of December. So basically the day after Christmas to the 31st, and then the first 2 days of January. So it's a 7-day period. The Stock Trader Almanac coined this phrase, the Santa Claus rally, in 1970. And since 1950, 80% of the time this week has had a positive return. Do you guys have any guesses why? There's a handful of reasons that you can point to give a reason why there would be a Santa Claus rally, or why stocks perform better the last week of the year than...
I'm going to let Rabih hit those, but I do have a question: can you call it a rally in a double-digit return year? That's not really a rally.
A little rally, yeah.
We got to think of
do his thing.
I would think of as the star on top of the tree this year. If we do have that, it's not exactly there's no rallying.
The icing on the cookie.
The icing on the cookie. The sprinkles on the cupcake.
Yeah,
yep.
For sure.
Now Rabih can tell us the reasons.
Pretty sure there's lots of reasons, and I'm also sure that it really depends on the year. The path that the market takes throughout the year determines on whether we're going to have a rally or not. Tax loss harvesting is a very big thing at the end of the year, right? So if you already had an opportunity throughout 2 years to harvest tax losses, you do not create the selling/buying pressure in December that's related to tax loss harvesting.
Yeah.
And another one, which people underrate, is actual volumes. People are out, right? So when you have 50% less traded volumes, the impact of every trade doubles, right? Because it's 50% volume. So it could be retailer going out there trying to reach the moon in those 5 days, and January 2nd comes back, institutional traders are on their desk, they're putting the real big money, and the prices reflect back to the new reality.
You're saying people are bored drinking eggnog and watching sports,
placing trades.
Let's go. They're avoiding their families and placing trades. Yeah. That makes sense.
That's it. So that's what two of them. You hit two of them, Rabih. The tax loss harvesting is one of them, right? Some people say that usually most tax loss harvesting gets done earlier in the year, or even earlier in December, in the last week of the year. It's what's done is done in a way. Retail investors are more prevalent in the last week of the year because, like you said, the institutional investors are off, we'll just say, or not as active, right? And so they're able to shine through a little more there. Year-end bonuses, a lot of times.
I was just going to say, bigger deposits probably in general.
Yeah. So, I mean, I would say it's very common for somebody to get a year-end bonus. And if you have a year-end bonus where you don't really know what to do with it, a lot of times you'll invest it, right? So I think there's more deposits than usual. This one was funny. The list, it says, a general feeling of positive sentiment and holiday cheer among investors is believed to contribute to a buying bias in the market. So
just euphoric. They're just
that
euphoric.
one feels good. Why not?
Yeah.
Send it for the vibes, you know?
Yeah, you put on a couple pounds and you buy a couple stocks. Makes sense.
I thought this one was interesting. It says fund managers may engage in window dressing, buying well-performing stocks at year-end to make their portfolios appear more attractive in reports to clients, which is kind of crazy.
Yeah. Rabih rolled his eyes at that one. That's what we're doing, for sure. We totally do that. Sarcasm alert. We do not do that.
Anyways, Merry Christmas. Happy holidays to everyone. We'll see if Santa Claus comes to Wall Street. No guarantees, no prediction, but I think it is I think it's a funny little anecdote to end the year on a little bit of an icing on top where most of the time the market performs well the last week of the year.
We're hoping that's the case. Rabih?
Yeah, I actually have a hypothesis in mind. This just came to my mind because earlier this week, Robinhood announced that they're also gonna start dabbling into prediction markets, poly market, Kalshi, etc. And Robinhood is the headquarters of retail investors who create the Santa Claus rally, right? Mm-hmm. So I wonder now if we're expanding the offerings and where you can throw that coin in the fountain type of investment during the Christmas rally, if now it's going to be distributed away from markets, traditional stocks into prediction markets, which would make a rally lower because it really only depends on retail investors. Yeah. So here's, I hypothesis. Maybe
that's interesting. We need to do a whole show on the poly markets and betting markets. It's
crazy.
It's so crazy. What's like just gambling and how pervasive it's become. Again, not as like a moral statement. It just kind of blows me away at how big it's become.
Individually, I'm against it.
The things you can bet on, yeah.
It's crazy now. You can bet on anything.
Yeah, exactly. Individually, I'm against it. But on an aggregate level, aka now we have a new tool that gives us the wisdom of the crowd on everything. It's very helpful. It's a new source of doing statistics. It's a new source of predicting trends. It's very insightful for a civilization, I'd say. But individually, it's a disaster.
It creates almost more transparency.
Yes.
Interesting.
The law of one price, we better price in risks. If the data is analyzed well, it could indicate for us where we have systematic risks, because if there's an issue and people aren't betting on it, why is that not being taken into consideration? It opens on our eyes on gaps. But this is only when you aggregate all the data for everyone and you see what the price is telling you, just like how we look at the stock market. The price tells you the information. It's not that you know better than the price.
Yeah, it's interesting. Yeah, I would rely on you to have more insight on that. I just think in general, I think at some point in the future, I don't know when it'll be, there's going to be a scandal on like catastrophic, monumental levels at some point. I think with I'm saying like an entire sports league is going to get busted with something at some point. I just think there's too much writing on the wall with like some of this stuff now like building and developing. I just think there's so many things now happening in the background that I think at some point someone's going to uncover it. That is my overall 10-year prediction.
Put it on the list.
Put it on the list. Speaking of predictions, that was a way better transition. Did the dental predictions come true? And before we get into this, so context, I found an article from like 4 years ago from one of the heads of Dykema and then another CEO of what was it called? The CEO of Patient Prism. They did an interview. And in this interview, they talked about, again, this was like 4 years ago, 14 trends they were predicting in dentistry that I thought we could just kind of go through. Some of them won't apply to us, or I'll say some of them we probably won't have much commentary on. It's just like, it's like really deep in like clinical dentistry that we probably can't speak to. But I think some of the bigger ones, I think we could speak to just even through our clients we work with. But before we do that, we need to, because this is our actual last show, a couple of things. I'm going to put us all on the spot. Well, first of all, we're going to run through really quick. Last time, Rabih hates this, but I'm going to continue to gloat. the big prediction Jake and I made 2 predictions this year, one in sports, because I do every year, and then we made one in the market. Both came true. Just to refresh everyone's memory, I predicted the Chiefs were going to have a downfall this year. I'm not gloating because I really do feel bad for Patrick Mahomes. That is terrible. But also I was right. And then the S&P ending positive, and I believe we said double digits when we back in April. That also has come true. I feel good about that. Any other predictions we're missing? Because I want to make I want to make one more prediction in the sporting world.
Yeah.
I have to, Rabih. I have to make I'm up against the gun. I was driving in this morning and I was like, I got to make a prediction.
Okay.
And something struck me in my heart and I'm going to share it.
I'm hitting the record button.
You want me to say it now?
Yeah.
Yeah. Oh yeah. Let's hear it.
Okay. I don't feel as good about this, but I am going to make the prediction. I'm predicting who's going to be in the Super Bowl this year and who's going to win it.
Okay.
Are you ready?
Yes.
And I don't feel as good about this year, but here's what I'm calling. Eagles, Broncos. Okay. Eagles, Broncos in the big game this year. Eagles are going to get their crap together, starting with the Raiders last week. They've got a couple of their cupcakes. They're going to figure out their stuff before the end of the year. They're still the most talented roster in the NFL. They're going to figure it out come playoff time. They're going to rally. They're going to go to the big game against Denver, and the Eagles are going to go back to back.
Okay. Let's go.
The Broncos are the number 1 seed in the AFC. Any AFC team has to go through Denver, but that's a tough place to play in the cold. Bo Nix is looking good. Denver's defense is insane. It struck me in my
homer pick. I like it.
Homer
struck
pick.
You in the heart.
I don't feel nearly as good about it, but that's what I'm calling. We're going to call it, and I might regret it. I might regret it in the beginning of next year.
We'll hold you accountable. Yeah.
You'll hold me accountable in February. It might just end in disaster. The other team in the AFC that I thought I was teetering on is could this be Josh Allen's year? Could this be the Bills' year?
Yeah.
No Mahomes, no Lamar, no Joe Burrow. It's like, oh man, you got to kind of get this done.
Yeah.
But I just don't think they have it. Anyway, any thoughts, guys? And any predictions you want to make before we jump into this?
I think the champions coming out of the NFC. That's as bold as I'll get right now.
Okay. That's hedging, but that's good. You want to take a team? You want to pick a team?
I don't feel confident.
Okay. Rabih, any thoughts?
I watch one game a season, so I'm definitely not giving an opinion.
What's the game that you watched this
the
year?
Super Bowl.
Oh, that's the only game?
It's the only game
If you did not watch last night's game, you need to go watch the highlights.
All right.
It was the craziest game I've seen in a while.
Yeah,
it was unbelievable. Amazing game. Okay, let's jump into this with dentistry.
You don't have a market prediction?
Not yet.
Okay.
He's got to let that hit him in his heart again.
I got to let it strike me in the heart. We're going to because last year we made it in April. I feel like we have kind of Q1 to kind of feel out how things are playing out before we decide. Is that cheating?
No, I'll give it to you.
Is that hedging too much? We'll find out. Maybe we'll do it the first show of the year. Of the year, maybe we'll make some predictions. Okay, so did the dental predictions come true? I'll go through these again. There's 14 of them. So I think some of these we're going to breeze through because we're not going to have a ton of commentary. And some of these are also kind of like odd predictions, but they're not even predictions. So specifically they are trends that they are predicting to come true or grow in dentistry. So number 1, this one I think is just kind of like, okay, makes sense. Patients want convenience. This is a trend that they mentioned that I don't really, I'll just leave it there. They say patients want convenience.
Do you think this means like they just want more scheduling options and more, I don't know, quicker in and outs and maybe a little bit more of like the commercialization of dentistry, which adds convenience?
Yep. Yeah, they're talking about like online portals, ease of booking appointments, filling out forms, longer hours, so office hours, online payments. I get it. I guess my response to this one was like kind of like, duh. Like, yeah, that makes sense. Rabih, any thoughts on this one?
Can you imagine if it was the opposite like that's a bold prediction?
I know. It's like, that's not exactly bold.
Patients want inconvenience.
Patients don't want anesthesia.
We're going to go counterintuitive. I actually think dentists...
I'm going to disagree with that one.
I'm going to go ahead and disagree. Patients are going to want it to be as inconvenient. We're going to go back to paper charts. Yeah. No, that would make sense. And I do think it's a good one to just highlight, like in modern day dentistry, those are infrastructure investments. It's almost becoming table stakes. You have to be making those investments. Number 2, this was an interesting one. I hadn't really heard of much, but it says emotional dentistry and mental health So they're saying along the same lines of convenience, one of the most interesting new trends is emotional dentistry. Emotional dentistry, as the name suggests, focuses on the mental and emotional parts of dentistry as well as the physical parts. So I think talking about like how you market or talk about your services is going to go more down the road of like mental and emotional health. I don't have much to say on this, but I don't know if you guys have thoughts.
I don't know. No, I don't have many thoughts. I'm curious to see what, like, I don't know. I think a lot of our clients are going to have to lean into that because dentistry at the end of the day is a volume business.
Yep.
And, you know, the more patients, the more dentistry, the more treatment you can do, the more money you're going to make. And so if you're in it for more of like a mental health spin or helping, I don't know if it's the dentist helping patients with that or vice versa.
Yeah. Yeah. I think this is more of, from what I'm gathering here, talking more about like cosmetic dentistry, orthodontics. When used right, it can help calm their nerves and give
Got
them
it.
confidence they're making the right choice. I may be thinking about this the wrong way, but I gather this is more a marketing type angle of like how they're angling or how they're marketing to this need or desire around emotional mental health, as opposed to just being like, hey, the ties of like flossing to heart health and like that kind of stuff. But I don't know. I'm just kind of speculating. Rabih, any thoughts?
It could be just because the client is changing. Like, give it a couple decades ago, you would only go to the dentist if there is an actual pain and you wanted to get rid of that pain. You did not care if your teeth were crooked. You did not care if you had a cavity somewhere, right? The hygiene wasn't as high. And now, as you know, the standards of living and the purchasing power of client
Social
increases,
media and
now they care more. Like, now everyone doesn't have, like, no one cares. Or I would say pain isn't really a priority. It is everyone has got their teeth covered for pain, and pain isn't really a conversation. It doesn't prompt them to go to the dentist. So now you need more reasons to go to get from the dentist. So you go get your cleaning, etc. You go get the whitening. You go get orthodontic services, which, you know, unless it's an urgent case, most of the time it's cosmetic. So I think they're just trying to capture what they call consumer surplus beyond the need. We're now going into the realm of wants and dentistry beyond the need.
Yeah.
And maybe that's, the market is growing there and you have to compete there.
Yeah, maybe the whole idea of like activating the other 50% of the population that doesn't go to the dentist, right? Like like there's just this always that hanging out there of like, how do we activate those people? So next one, number 3, teledentistry is huge after the pandemic. This one is interesting. I don't hear much about this. I haven't thought about this much in dentistry, but Will, for you from clients, have you heard of specifically? Have you had any experiences with teledentistry?
I still think it's pretty. I haven't heard a ton about like adoption and profit coming from it.
Yeah,
I've heard some clients doing it, and some businesses starting to do it and roll it out. But I still can't really connect to how you're still going to have to see the patient in person at some point. So I don't know how
to do the actual work.
Right. So is it actually less convenient to do like a consult over the Zoom and then have them come in? Maybe not. I don't know.
Yeah, I personally haven't seen this one take hold as much, like just again through experiences like you will. But it's interesting. They're saying this is going to help rural areas, which makes sense. You know,
Sure.
if people that don't have access, or as opposed to doing multiple drives into the office, maybe
Sure.
you take care of that consult rurally. They've also said they don't have any data to support this, but they say that they have found it has also been found. I don't know if like through research or studies, but it has also been found that teledentistry works just as well as in-person consultations when diagnosing cavities or making plans for treatment. So
pretty cool. I mean, it is the future. I just don't think we're there yet. But I can see a future where, you can do everything over, most diagnosis, treatment plan, and then just come in and do the work.
Yeah. Can I just say, I'm going to sound like Jake for a second. I don't know if I like the overall just the overall trend we're moving towards of like, I can order my food on the couch. I can just like sit and watch movies. I can get my groceries delivered. I can do a Zoom meeting with my dentist. Like I don't know. Maybe I'm long human connection. I'm shorting teledentistry.
Right.
But Rabih, what are your thoughts?
Yeah, honestly, my first reaction was like, those guys looked at a study about general changes in the healthcare industry, and they're trying to see whether it also applies to dentistry. Because outside of dentistry, where you need an intervention, where you have to have your fingers in someone's mouth, the medical field as a whole is really benefiting from the telehealth aspect, right? Because you're listening to the patient's symptoms, you're giving them a medicine or telling them, hey, go to an ER type of thing. Can we make the stretch that it'll also be as impactful in dentistry? I'm with you, Matt. I don't think as much.
Yeah.
That will be.
We should have started with this, but we were three non-dentists sitting here talking about very clinical, like dental things, including the next one, number 4, which is 3D printing. From 2021 to 2028, the 3D market is expected to grow by 21%. I don't have the actual data. I should have looked this up. Maybe someone can chat GPT this, but they're talking about 3D printing becoming more popular. It's improving, it's just an overall kind of improvement of technology around, with GPs, with implant technology and all that kind of stuff. So I personally have seen this one more just through anecdotes, like just through stories from clients. But again, I don't have data on it. I don't know if you guys have thoughts.
I like it. Like 3D printing is also supports the first claim about, or the second claim, where it is like you need to go for market
convenience.
Convenience and related to mental health, because 3D printing allows customization. And even outside of dentistry, customizing to your client needs is an added value. And 3D printing will do it great. Like I had an implant, a crown that was like pinching on my gum, and they had to shave it off for it to fit. And now they can just print one that fits perfectly without having to do any adjustments. Like this is a small example. And I think it's out of all the predictions that we listed so far, I like this the most.
Yeah. Well,
I think it's going to be huge. I mean, technology is always going to get better. It will be crazy to fast forward 10 years and see what 3D printers can do, or what other dental equipment that utilize 3D printing and same day treatment and things like that. Like, rewind 10 years ago, that it wasn't a thing. And I know clients who are doing a lot of this stuff, and it's the future. Again, it's the future. Yeah. So we're front running a lot of this stuff, but it really is the future. So yeah. I don't think you need to go run and buy a 3D printer unless you have a knack for it.
And a business plan for it.
And you know what you're going to use it for. But I know clients are utilizing them for implant guides and things and temps and same day stuff. And so I think it can be powerful if you know how to use it, and if it can add value to, like you said, make the patient experience better. I got down a rabbit hole on YouTube also for some reason. My algorithm started feeding me 3D print stuff, and it is kind of therapeutic to watch a 3D printer do its thing.
Yeah. Okay, I got to do that this weekend. Okay, number 5. This is kind of goes along the same lines as technology, infrastructure investment, but the prediction or the trend they're predicting is laser dentistry becoming bigger and bigger. I'll just say, I don't know if this one's come to fruition as much. I think this one has become, again, I'm going purely off of anecdotes and client discussions, that this is one that it's kind of the idea sounds great, but I haven't heard. In fact, I just talked to a client a few weeks ago who does use lasers, and he had talked about being able to pot kind of as a second kind of mountain, as David Brooks called it, his second career, being oh, maybe I'll teach laser dentistry. But he shared with me, again, one dentist, one opinion. He said it just hasn't taken hold. Dentists are just not using this as much as I thought they would. So I think, again, one dentist, one opinion, but I just haven't heard a lot about lasers really becoming pervasive in the market. But what are your guys' thoughts on this one?
I have a handful of clients who buy them and ask me how they can finance them or how they buy them, and that's really it. I mean, I think people are slowly starting to
Yep.
more and more, and I think it's the new, a new proposal they can offer, and it is a differentiator. It makes their service a little different than every other dentist in their town. If you can market that you use the newest technology or the best, stuff. So I think it's cool.
Rabih?
Opinions. I do not know what this is.
I'll say, if it can get rid of my PTSD from my childhood of that freaking high-pitched drill sound, and they don't use that anymore, that always gives me chills up my spine thinking about that. So
yeah,
I'm all for it. Number 6, subscription-based coverage. So this is just talking about kind of being kind of generally more kind of goes along with the convenience topic of just giving more options when it comes to financing dentistry or paying for dentistry, and kind of lowering the financial barriers in the industry. Uh, I would, well, I'll go to you, Will. Any thoughts on this one?
Yeah, I mean, we have a lot of clients who obviously are fighting the battle with insurance reimbursements. And we have a lot of clients who decide to drop insurance or drop some of the insurances that they accept. And a lot of clients are starting to implement these, whether it's like a subscription based model or just an in house membership plan of some kind. It's sticky, keeps the patients in. If they've got, anytime you are giving money to an office on a regular basis, it's kind of a sticky thing. It's going to keep your patients in there. They're probably going to use your services. Usually it's some customization required to decide how much of a discount you want to give to more full services and what the membership plan gets you, how many cleanings, exams, those kind of things. Usually it's pretty beneficial for a lot of people. And we have partners that put these
Shout out Dental Menu.
Yeah.
Paul Lowry, incredible company. Dental Menu is amazing. Yeah. Rabih, any thoughts?
The benefit of subscription models is more financial to the dentist than it is to like the patient experience, etc. The framework from which we look at it is that subscriptions smooth out your revenue or your collections. So if your collections are bumpy or they are cyclical or etc., this is where a subscription model fills the gap. It might not be the answer for everyone.
Yeah. Totally agree. A couple of numbers that they mentioned is 69% of people who don't get dental care reference not being able to afford it. And then 83% of customers prefer practices with membership plans. I don't know where that data comes from, but this is the numbers they're quoting. We're going to speed through this, but this is a big one that I wanted to hit really quick, that they say less solo practices. So they're saying, this is a trend that's going to continue. Few dentists want to work alone. There's going to be less solo practices. There's going to be, they're probably, and we're going to get to this later, like consolidation of the space, but they're just saying less solo practices as a whole. Will, do you have thoughts on this one?
I think it's just, there's going to be more consolidation. That's the prediction. Yeah.
Yeah. I think that's pretty cut and dry.
Group practices, consolidation, less hang your own shingle, be a dentist. So
yep. And that could also mean like less solo practices, as in it could just be more partnerships, like
more partnerships,
less people want to go out,
multi-location.
Exactly. Less people want to go out on this on their own. This kind of goes hand in hand. Number 8, they're predicting more mergers and acquisitions. By the way, this was 4 years ago. They were predicting this.
Didn't really happen.
I will say, I actually don't think this one has come true as much as they thought it would. I've said this many, many times, and I just don't think it is. They're saying in the next 10 years, you're going to see this white hot M&A climate, that we're in it's going to intensify more. Anyway, yes, of course it's happened, but I don't think it's happened as quickly as they thought.
Use the term white hot.
Wouldn't use white hot. Maybe at the time, like they were seeing trends post-COVID, cost of capital was really low, but it's just not coming true. And I stand by this. I just think it's proven to be harder. I think dentists are wising up to it, and they'll make adjustments. It'll continue to happen, of course, but I just don't think it's as much as they thought. Right now, the data we just hit last week, I think 16% of dentists are affiliated with a DSO of some kind. And that's just, I bet if they looked back and they could predict now, I think that'd be lower than they would have guessed. But Rabih, any thoughts on this one?
No, I think you nailed it on the head. It is the cost of capital. It could, resurge once interest rates really drop, like below the 3 level. But right now, it's too expensive from the DSO perspective to just expand.
Yeah. Number 9, they're saying dentistry is recession-proof. And maybe they're just saying we'll continue to be recession-proof. I think in some ways that's true, more so than other industries. But any thoughts on this one?
It is recession-proof, but it's drifting away from it. Like if I want to stay consistent with the analysis that I did, if you move more towards cosmetic dentistry, etc., where there isn't a need, there's a pain, but there's a want, then the type of spending moves from, defensive necessary spending to discretionary spending. And that one is cyclical, and that follows the market. So the more concentrated you are in this tangential dentistry, the new frontier of dentistry, the more cyclical it could be and less recession-proof. What makes dentistry recession-proof is that people are in pain regardless of economic conditions. If you're servicing for stuff other than pain, expect cyclicality.
Orthodontics, cosmetics, those kind of things. Yeah.
Yeah, totally. Number 10, this goes along with what we already talked about, but they're saying DSOs will invest more aggressively. I stand by what I
mean,
said.
if interest rates drop again, maybe they get going again.
Yeah. And I think they will. Interesting quotes here, though. This is back in 2022. They said, you just have the most explosive M&A environment I've ever seen going on right now. That was in 2022. It's probably true back then, slowed now. And it just hasn't helped with some of the big stories that have come out. One interesting thing, though, they said from 2013 to 2033, the U.S. population will outpace dental practitioner growth by 13%. We have to go back and confirm that now that we're 4 years post, but the general trend, I would look at that just as an overall positive for dentists. And we gave stats last week that dentistry is growing. So, okay, last few, we'll just blast through these. I don't know if I have much to say, or we have much to say on these, but they're saying the dental therapist trend will grow. I haven't heard this really, but Will, have you heard any of this from clients or anything?
No.
Yeah, I haven't much. Okay, number 12, DSO market share. Some of these are repetitive. It'll become larger. Again, we've kind of spoken on that one. Number 13, they're talking about multiples. So this is referring to the multiples that you get on a sale, a transaction. So whatever your profit margin is, they'll do like the value of a practice is generally based on a multiple of that. If you have $1 million profit, they'll say, oh, we'll give you 8x that or whatever it is. And they're saying, they explain what a multiple is. Their whole idea, I think, here is saying, I don't really know what they're saying here, to be honest. If they're predicting it'll go up or down, they're just explaining what a multiple is. So this one doesn't really fit with their whole thing. And then number 14, last one, I think this one is big. Moving forward is they're just saying artificial intelligence is going to be like the use of AI is going to increase in dentistry.
That's a pretty cool prediction from 4 years ago to
that is cool.
That be their prediction when 4 years ago, I don't know. I don't think a lot of people knew about it. Maybe that's why they threw it as last on their list, because they were just like, oh yeah, we got to throw this on there. Not really. I mean, that one blew a lot of the other ones out of the water.
I think so too. This one they nailed, I think, just across the board. Because this, like you said, this was 4 years ago. Or going on 4 years ago. And yeah, I think you're totally right. Rabih, any thoughts on that last one?
I agree. But it's affecting everything, not just dentistry. So
yeah,
you got caught up in the wave.
I'm a little bit nervous about the fact that I just threw out a homer pick for the Eagles, but I just threw it out there, guys. I threw it out there. I feel not great about it.
I was not expecting it. I was like thinking that you would like come to like, I'm just going to go with something else. But then it was like, no, I'll just stick with my boys.
No, but here, I will defend it though really quick, just rationally. I think there's some rationality to this. Number one, I already mentioned it. They are the most talented roster in the NFL. They really are. I mean, that's just, I think that everyone agrees to that, right? Yeah, which is why it's so frustrating to see them underperform.
Objectively, 100%. There's no error there.
Yeah, so they're most talented in the NFL. Every single team that's in the playoffs has shown some ability up and down, kind of like, where did that game come from? Like, there's no world beaters right now. It's just going to take a couple of these cupcake games, starting with the Raiders, now the Commanders twice. They're going to get their crap together. They're going to figure out all their stuff. They're going to get hot. Jalen Hurts in big games has still proven to be the man. So I'm just saying, I think it's going to happen.
Yeah, okay.
I don't feel as good as last year, but Rabih, Eagles, just go with it.
Sure, whatever you say, Matt.
Okay. Well, final show of the year, guys. If you're still listening, you're one of the cool ones. We appreciate it. If you want to going into the new year, you want to get your mind right about your money. You're like, it's time to get organized. It's time to finally take the jump and get some help. 2026, I think, is a great year to do that. And you can reach out to dentistadvisors.com and book a consultation. We'd love to talk to you. For now, Will, Rabih, thanks for sharing your words of wisdom, your final words of wisdom of 2025. Everyone, thanks for listening. That was our 2 cents. Till next time. Bye-bye.